Welcome to Markets Now. I'm Michelle Rook with Scott Barlick of Coima Barlick. Well, we're seeing a little bit of higher bias in corn and beans this morning. Wheat a little lower. Cattle have been two-sided, and the hogs are lower as well. So, Scott, let's talk about the cattle market. We've been hitting new contract highs in live and feeder cattle futures day after day after day on the heels of record cash. And it doesn't look like there's much sign of any slowdown, does there?
Yeah, it's just another great day to be a cowboy. So thanks for having me. And it's been the kind of trend you want to see. You know, if you are a producer in cattle, and every day we're just grinding higher. And if you have any setbacks, there's always that little bit of a scare that maybe the top's in, but cash just stays on and bails the market out. So riding that trend strong. Feeders got through their 300 number. Now it's we've had our 220 plus cash. We've got April futures are off, June catching up to where they were. It's just very impressive, and I think it reached a lot of numbers that we felt were really high. Long ago when we were saying I think feeders can go to 300. Now that we're there, wow, it's pretty impressive, and you kind of start to say, okay, what's next? What's the encore? But cash continues to perform and leading it higher.
Yeah, let's talk about where cash did develop this week and the fact that we're starting to also buy for some delayed delivery, it looks like, or the packers are.
Yeah, producers have just had extreme leverage over the packers here, and it's been a lot of years. Been a broker for a long time and feeding cattle for a long time. We haven't had this kind of leverage to use. We just felt like we lost it. And there was all of those initiatives to try to get more cash negotiated trade, and couldn't win those battles. So I think that's just kept spurring herd liquidation. And we've got this, dangerously tight supply now to where it's kind of spooky how much leverage we have. I mean, it's been packers looking for cattle. We've got these really slow weekly kills. And I think the packers are out there trying to buy cattle. They're trying to get them. They're just not there. So what we've seen this week, some 228 live. We're rallying $5 every single week from 208, 213, 218, 223, and now 228. So that's been your weekly progression on cash in the north, and very strong. So the 228 for pretty much immediate delivery. I think this is the time of the year that they usually want to buy cattle for every single week out. June is usually discount to where the April goes off. You can pretty much pick your week and find a bid, and it's usually just a trailing price. But some of these prices that are hung out there are impressive. These grid prices for the last week in May, dangling with some premiums and some pluses, and some of the 228 lives had some pluses. So you're kind of able to ask for some of those and get it, say, hey, I wish the choice select spread was at this. Will you offer me that? And you can get it. And for others that are short June cattle, they're hedged, they're sick of margin calls, you can find some bids out there. Second week in June, I'm hearing of a 226 trade that's out there. That's just wow. So that was a $13 basis for second week of June. And I mean, as a producer, you're not going to pass these, Michelle. These are great prices, and you're just so happy to take it. You're bringing in $600 plus per head. Hey, don't feel bad that somebody else got a little bit more. You're wanting to take a piece of that pie as it's getting passed around here.
Yeah, and we'll talk about corn falling back this week, but I'm certain that really helped some of these profit margins, or looking ahead at some of these profit margins for this week. So let's talk about, just briefly, tell me where the Southern cash trade developed. I had 218 to 221, but where the volume mostly come in at?
I think in that range. I had heard a little 220, and then heard that it was being passed, and then the 221. So it's been a lot slower news down there in the South, and that's why you have a range of what it actually is. And there never is a lot of cash that trades down there. It's mostly formula trade in the South. So if you hear a little bit of cash, that's usually it, and it's done. So I don't expect to hear much more. All they need to do is establish their base, so all their formulas can be priced. They're not going to hold out for much more. So that would be an accurate range.
You bet. Okay, so the other thing, boxes climbed over almost 348 yesterday on the choice boxes on the close, the highest levels we've been at for a couple of years. Demand doesn't look like it's slowing down either.
Yeah, spot on. I mean, just talk about this demand. We're already talking about tight supply. And we know that we're making them big as well. We're putting a lot of weight on them. It pays to do so. When you have 228 cash cattle and your cost of gains, yeah, you can lose quite a bit of efficiency before you start to go backwards in that program. So you're making them big, to make up for that lack of production as well. And boxes keep going higher. Demand stays strong. With this tight of supply, you would think, okay, we need to ration some demand, but all you hear is demand is really good. Demand is really good. The next generation is really into high protein diets, and they know beef is what they want. It's a high quality source of protein. It's very good for you, and we knew that, but we need to get to a point where we're probably going to ration, and I just don't see it yet. It hasn't happened yet, so I expect that we need these boxes to go higher. With production at risk of being pretty tight, we're getting these yearlings cleaned up, and this calf crop's not going to be ready. It just feels like there's still in need of more numbers. We need more cattle to keep up with this demand, so probably going to have to find a way to ration that just a little bit more yet.
You bet. Okay, so I got to ask you, the UK deal that was, or the memorandum of understanding, we don't have a deal yet, but included beef yesterday with the UK. Was that really a big deal, or did we make a little more out of it than probably need be for what's going to actually go into that country?
I kind of brushed it off and said, whatever, I guess that was my thought. I figured any of those overseas beef deals are, I'm especially I guess with the UK, probably more risk of beef coming our way than it is going that way, I guess, in my opinion. So I didn't make a big deal of it. I'll take anything bullish they want to throw at the market, but hopefully it works. Hopefully we get some beef over there, but I didn't really think that it had to play such a big market factor. I think cash is king, and what happened there, that might have just been another story that just kind of made it into the daily. We're up every day making record highs.
You bet. I didn't make much of it either, and you're right. We are going to import from them as well some beef, so maybe it's going to be a wash. Okay, the hog market is kind of been failing here. Is it all technical selling, or is it the fact that the cash market is quit performing?
I would lean on that cash market, just the index not going up as fast as what the market probably thought it would. We were all ready to put the satchel down and really, rally these hogs back above $100 and feel okay with the tariff delays. But that index lays here down at the $90 range, and we've got a little bit too much premium on some of these futures, so I think they're just kind of sucking back down towards it just a little bit. They haven't had any real major direction, but just a little bit more weakness here on the front months. Some are still trying to say, hey, we still think we got a chance to be $100, but caught up in all the tariff battles and uncertainty, they're just not a market that has a strong trend right now.
Yeah. So the hog market is going to be watching the weekend developments here in terms of the U.S.-China trade talks in Switzerland, as well as the soybean market. But it looks like soybeans are a little more positive about maybe us getting some tariffs lowered than the hog market is.
Yeah, possibly. I would say none of these markets are runaways for sure. But yeah, we're pretty tied into this weekend story and some of these grains and the hogs, those export markets. And I don't know how it's going to unfold. I mean, we're all trying to guess. It's good that we're coming to the table and we're meeting, but what we read today is, okay, the U.S. is saying, yep, we'll start to relieve some of these tariffs here and there. And I don't know, going to battle with China, they've already made their point that they want to be tough. They want to stay strong. And I think that still could be how it's going to go. So my expectations are pretty low. How we're going to come out of this weekend. I love that there's some optimism going into it, but we'll see. Maybe Sunday night's going to be a little bit of an interesting trade, whether things are going poorly or going well. So hoping for the best, I guess.
Yeah, well, soybeans might be seeing just a little bit of optimism with the higher start that we had here today. The corn market has had a really ugly week. We're seeing a little bounce today. Is that just short covering because we got beat up so bad? Because honestly, this market is kind of watching what we do in that May WASDE with that first estimate on ending stocks, right?
Yeah, it's been beat up. That's for sure. The steady grind lower and getting to a price to where for end users, it's very appealing. I mean, the value buying is kind of evident. I feel like they're liking to buy corn at this price, but it just has been grinding lower, and you've seen the funds just unwinding longs just every day to where they're getting down towards a neutral position on the corn, which, to still be liquidating some longs here at these prices is a little bit, head scratching. So why is that? And yeah, it could be just this, Monday WASDE report. We do have to pencil in a record crop. These estimates are so big. Ending stock number is big. So when you see that size of a crop production number, that might be what's scaring the funds out just a little bit. So we'll trade that up front. The however part is this crop's not made or lost yet. I know we've got some increased acres in corn, but I think that ever growing weather risk is still there. We usually trade a lot of weather every year, and this one is just kind of feeling just a little bit different how dry, it really is. So that hasn't entered the market. Part of the reason why we've just grinded lower because it's too early to trade some of that weather, but you're in a fire danger watch here in Northwest Iowa till Monday. It just feels a little eerie that it's May 9 and we're still talking about how dry some of these conditions are around here.
Just quick, if we use tariff considerations in the May WASDE, and USDA said they're going to, do you think these ending stocks numbers on both corn and beans for new crop, are they overestimated at this point?
Not so much yet.
Or underestimated, I should say. Are they going to be bigger than we think?
When I first looked at them, I actually thought they would have been a little higher. I thought possibly if they're going to say trend line yields and this is what we're going to do, I expected the estimates to be a little higher. So I kind of think there's a little bit penciled into where we're kind of in that middle ground area. I feel good where they put them as far as an estimate there. I mean, we do have a chance to knock it out of the park with corn production if we do get quite a bit of rain. So I thought 2 billion bushels, I can live with that. I thought they might have had that a little bit higher. So maybe they're penciling in, some of that better tariffs. Who knows? But that's probably a great spot to be. I think that's kind of a middle guess, safe guess, with the ability to move either way with it.
Okay, we'll see what we do on Monday. Thanks so much, Scott Varlick with Varlick. That is Markets Now.